Welcome everybody to Gold Asset of the Day, gold forecast, and really what we're expecting over the course of this week. Before doing so, let's just reflect on what happened last week. The price action, of course, last week we had the FOMC statement, which was very much in focus, and also Friday's non-farm payroll. So for those of you who were trading gold last week, you would have noted that what we forecast for gold, which was essentially that bullish momentum at the beginning of the week up until Wednesday's FOMC statement, and then look out for the potential for US dollar strength to come back in from the Thursday onwards, is actually exactly what happened. So if we have a look here, we mentioned that gold, we were looking at potential for this bear flag to break down later in the week, but take advantage of this upside momentum in the lead up to the FOMC statement. So that will help you just moving forward. We have 8 FOMC statements over the course of the year. And just bear in mind, so far, particularly in 2019, we're tending to see gold rally in the lead up to FOMC statements, and afterwards is where you see the profit taking and often that dollar strength come back into the market on Thursday. So you can capitalize on that by being long, certainly, Monday, Tuesday, Wednesday, taking profits just ahead of the FOMC statement and then looking to switch position and sell short. Now, what is very evident at the moment with gold is that we are within a range-bound market. We have support at the moment, as you can see on the chart, which is residing around 1265. So you've got 1265 to 1266 as support, resistance which is coming in at 1286 to 1287. Gold week to week is moving within a 200-point range. We mentioned last week you want to capitalize on that $20 range or 200-point range. Essentially how you can trade this, you can buy at support near to the 1266 to 1267 level, and you can also sell at resistance around that 1286 to 1287 zone and capitalize on that 200-point range week to week. And so far, as we continue to see the price action develop this week, we are sitting mid-range at the moment, around 1280. So I would look again to be a seller if we get back up towards that 1287 to 1290 range, and then look to capitalize on that move back towards the 1270 range and then buy back in at 1270. Now, what's quite important that you should be aware of is hedge funds and money managers over the latest week, they switched their position. They're no longer net sell short. They have now switched to net long, both on gold and silver. So what I would definitely be looking at would be potential to buy back in if we get another retracement back towards that 1260 to 1270 zone. If we were to, for example, break that level, definitely the 1260 level could be where we see significant support to come back in, evidence for support at that level. But the price action at the moment is suggesting, in fact, that we should get supported around 1265 to 1270 if we do retrace to that level. Now, what lent further support on the open was especially geopolitical tension, of course, in the form of Donald Trump, who has now stated that he's going to be looking to increase tariffs on China. So whereas before the narrative was very much that everything was going well, trade talks were progressing very well with China, Donald Trump has really sent this bombshell to the markets, if you like, from Sunday, which caused a big gap down on certainly equities, S&P 500, Dow Jones, crude oil, some of the major currencies, and gold got the safe haven bid. You want to look out for that over the course of this week. If we do see escalation in trade war tensions again here between the US and China, that is where gold can springboard higher. Now, I would look at that range for this week. So essentially, as we've now seen a big shift from hedge funds and money managers, they're now net long as opposed to net sell short. That could now see more strong buying come in if we do get retracements back to support. And at the same time, I would be looking for the potential to rally back towards that 1287 to 1290 level. I do think if we can finally break above 1290, if we get another retracement to that zone, if we break and close above it, that is where we could start making the move back towards the 1295 to 1300s. But week to week, we're still tending to move within that 200-point range, which you can capitalize on for those of you that trade gold. Now, what else do you need to be aware of over the course of this week? Well, usually the dollar strength again tends to come back in later on in the week. So particularly Thursdays is the strongest day of the week for the US dollar in 2019. Again, that will help you with your positioning on other markets too. Now, what we have seen quite a lot lately as well is rallies on gold on a Friday, particularly if it gets very oversold on a Thursday. Don't necessarily expect that momentum to continue to the downside beyond Thursday, because it's often Friday where you get the buyback. So of course, last week on Friday on the non-farm payrolls, we saw the biggest move to the upside on gold that we'd seen in approximately 2 months, with the breakout to the upside and of course this switch in overall positions from funds where they have now gone net long. We also saw a 2% move to the upside for silver as well. So this week it's going to be a decision point for the metals, but I would just take a very straightforward approach to them. Buy at that support zone. So when they do get retracements back to support, I would look to capitalize on that range, buy at support, and then take the price back towards the resistance zones, then take profit at resistance and look potentially sell short on gold, taking it back towards the 1270 zone again, or also look at dollar strength to take advantage of those breakouts, the upside, which usually tend to occur around Wednesday through to Thursdays, is where you can capitalize on that dollar strength. So I do think you should keep an eye out as well for this potential escalation in tradable tensions. We'll be looking out for that, particularly this week on our real-time news feeds with respect to any additional trade tariffs which get confirmed, which are being proposed for China at the moment, where we might get that safe haven bid again here for gold. So do keep an eye out on that at the moment. If I just take you back to the chart here again, we've got support very clearly at 1266. Right now, the price is at 1280. It's actually rolling over slightly. So if we do get a move, essentially a break down in price back towards that 1266 to 1270 zone, look at lower time frames and see if it gets bought. That's what I would look at. If we get a rally back towards 1287 to 1290, then look out for profit taking at that zone and evidence that traders are taking profit, and then they're looking to then sell short again. Now, as opposed to oil, which tends to be well supported normally over the month of May, usually gold and silver do not perform as well over the whole month in general. I mean, in fact, we are within quite a tight downward trend at the moment. You can see that quite clearly on the chart. We've got lower highs and we've also got lower lows. So we're clearly within a downward trend, but more recently, it's a range-bound market. So just capitalize on that range. So with that, that has been Gold Asset of the Day. We wish you good trading and we'll see you back here next week for the next session.